Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 1% there on the S&P. Nasdaq did make a move, a stronger move today on Nasdaq, 2% positive. Semiconductor, I think only index that was green yesterday while everything else was red. It was the semiconductor. Semiconductor continues on leading the market last couple of days with a 2.5% positive. Dow, Russell 2000, they're up about 0.5% or so. Banks and the energy sector pretty much flat. Transport's down a little bit. Biotech's up 2%. Emerging market up about a half a percentage there. Grayscale, Bitcoin, green 1% there. Gold and silver up a little bit, but miners did make a move there about 1.2%. Oil's down 2% today. Dollar's down about half a percentage. Treasury bonds up about 1%. VIX is down about 7. So let's stick with the S&P Spider 65-minute chart here. So what you've witnessed in the last couple days, pretty much this week, is what I call shenanigans, right? This is a shenanigan. So there's a couple things I want to talk about. First of all, I want to talk about shenanigans. Second, in this video, I want to talk about what every bear is talking about. Why can't the bears, why can't the sellers catch any break? Every time it looks like there's some sort of a downturn, buyers step in and market gets right back up. It's been happening over and over again. And bears and the sellers are asking, why though? I'm gonna answer that question in this video. But let's talk about the shenanigan first of all. So just looking at this price section right here, that's what we call classic shenanigans, right? Because the reason the shenanigan means it seems as though this was the bottom there, and then market had a nice gap, made a higher high, right? So a lot of times when you're focused on so much in the short term fluctuations, what's gonna happen is most people, when we see a downturn like this, most people not gonna be buying here and here. What they do is a lot of times people get stopped out, when certain level is breached, and then once they're stopped out, market gets back up, and then people chase back up, and the market comes back down. There you get stopped out again. So what happened this week is just pretty much market whipsawing everybody, right? And so this is why I always mention and emphasize the fact that you should be focusing on long-term fluctuations of this market, long-term trend of this market, not too much occupied with these short-term fluctuations, because if you do, you will be whipsawed. You will get whipsawed back and forth. And this market has been in this market probably since about November, December, as far as I can remember. So about 6 months, man. That's a half year. You've been getting whipsawed. When I say whipsaw, meaning you get out, you get stopped out, and the market gets back up. A lot of people start chasing back up because now it looks like this is a good setup. You chase back up. Now this thing comes back down, and then you get stopped out again. You see what I mean? So, and this is also designed to get those weak hands to be whipsawed out, get stopped out, or the short sellers trying to short, this looked like that. It was like that island top reversal, right? And this is why I give you guys that classification, right? The micro term, the short term, the mid term, right? You have to give benefit of the doubt. Yes, there is a short-term selling signal, but what about the midterm? What about the long term? What about these key moving average? We've been talking about the impressive resume, my midterm moving average. The presence and the impressive resume that it has, because going back to months later, how every time this has been acting as a pretty strong support. It is no coincidence. It is no mistake. It is not a random occurrence. When we did see that initial island top reversal, and there's a big gap down, 1.2% gap down, that's a pretty big gap down, and all of a sudden it hits that my midterm moving average. We stay there for a couple hours. 2 days later, boom, we're back up to where we're at pretty much last Friday or Monday. how quickly we got back up. So that's the shenanigans. And the market, this is what you signed up for, ladies and gentlemen. When you start to trade and invest in this market, this is not a crazy market. I want you to understand, this is a very much normal market fluctuations. Nothing crazy about this. This is too volatile, right? Only undisciplined, unseasoned, untrained, no self-controlled traders and investors will say something like that in the last couple of days, or maybe, last couple of weeks of volatility. It's nothing for position traders and long-term investors. If anything, it provided opportunity, right? So that explains the shenanigans. So let's answer that question. Why can't the bears, why can't the sellers, right, have any kind of break? So, and that comes down to again, understanding the long-term trend of things, right? And I cover this almost every single weekend analysis as I look at the long term. What you're seeing right here in this chart going back to 2021, if I flip back to daily, so I don't have time to do that today, and I've been doing that every single weekend, so you can go check out my weekend videos. This is just a little blip of a longer term trend, right? So you can see in the big picture there, you can see all these, so look at all these whipsawing action, right? Initially market was around 360 in December. Market got up to 420. If you are so concerned about short-term fluctuations, you're getting whipsawed left and right, you're trying to short, you're trying to long, you get stopped out, you short, you get burned, you know what I'm saying, you have to cover. So the market is going to constantly just turn you around, and then you realize the market was at 360 several months ago, now it was at, at the peak it was 420. You realize you really haven't able to gain anything, though market did make a move, because you can see from here to here how volatile was this market. How volatile was this market? We had one smooth move just lasted about a week or two, but for months. So think about this. For the last 6 months, just really volatile, turbulence, choppy market. You get out of those 6 months, right? 6 months is how many weeks is that? 24 weeks. Out of 24 weeks, you got 2 weeks of this bullish run. So if you're trying to capture this out of 24 weeks of choppy, shenanigan, volatile turbulence, you can't. You can't. It's like you're trying to hit a jackpot, right? But what if you went long here and here, somewhere here, and you just held that? You're more of a long-term trader, what I like to call position trader, and a long-term investor. So you held through it, maybe look for some opportunity on these dips. You're doing much better versus you trying to go short here, up, didn't work out. You're trying to go long here, up, got stopped out, and then you flip back short here because you thought, well, look at this. That's a head and shoulder formation. How many people are saying that? I remember some people said that on my YouTube comment back, that's a head and shoulder formation, okay? Oh, then you went short here, you got stopped out of your long, and you missed out this entry. Oh, you chased back long here, boom, you got stopped out. You chased back long, another one, right? And then you're trying to go long, short right here because you thought this is important support. You got stopped out, went short, that didn't work out. And then you got really sick of this market. So you know what, you tell yourself, you know what, I'm done with this market. I don't want to trade this market anymore because you've been getting chopped to death here for days and weeks and months. And then finally when you give up, what happens? Market actually gets into smooth price action, right? So you finally missed out this move. And so now you start chasing back up here. And then what the market does? Boom. You guys know exactly what I'm talking about. I am not writing a fiction here. This is a true story, how majority of traders go through this. And market always fools the majority, right? So, looking at this market here, Looks like we're back above the both of my short-term moving averages, and that's something that we talked about. The best case scenario for the buyers for today's price action is what? Gapping up. But I talked about gapping up above 414 would be better, or gap up above it and have a thrust. That's what we saw. First hour, second hour, right? 2 hours of thrust is what we need. We needed that. And then the third hour, we saw pullback, but we held it. Fourth hour, continued on. Fifth hour, held it. So pretty much all throughout the day, first 2 hours, a big bullish run, and we held it. That's a really good sign. And with that cultivation, looks like we might have the equal highs here. We may pull back a little bit to retest some of these short-term moving averages, and then get up to fill this down gap that is remaining. Remember, this is why we've been seeing some of the hecticness in the market, which we talked about back and when we're up here. So we really need to get up here and fill this gap quickly. But there are a lot of supports for the buyers. This island top, now this island bottom actually, because now this is island bottom because there's a gap down, or there's a gap up, gap down, back to back. This is actually rare to see. Right? So because we were in a midterm again. I think I forgot to answer that question. So why bears are not getting any good why are the bears are not getting good breaks is because we're long-term uptrend. Right? We're a long-term uptrend. So what happens is market pulls back to cultivate that higher low. So if you look at the lows here, you can see that subtly this market continues to cultivate higher lows, right? Is it a fiction or is it truth? That's the truth. So as long as we continue in that perspective, we want to what? Give benefit of the doubt. When I say benefit of the doubt to the buyers, what am I saying? Am I saying that means it's just going to go straight out without pulling back? That means in an event when the market pulls back, we want to give benefit of the doubt to the buyers that it is pulling back to cultivate that higher low. So you really want to understand the long-term and the mid-term and the primary term perspective so that you don't get caught up in the short-term shenanigans and up and down choppy fluctuations, gap up, gap down. But nonetheless, again, so this is the reason why bears haven't been getting any good breaks. It's because we're in this raising bull rally since the COVID lows. Anyway, so you can see that gap open, up gap, down gap, up gap. It's the rare to see. I don't remember I think last time we saw something similar, maybe May last year. So it's been a year we saw anything like that. So back-to-back island reversal. Because remember, it was island top here yesterday. Now all of a sudden it's island bottom here. You see how quickly that shifted. So I think this short-term moving average is going to provide support. If there's a more decline, another shenanigan or something like that, this level, that gap here is going to provide support. That's going to provide that cushion. Again, we're in a midterm moving average or midterm uptrend. And so we want to give benefit of the doubt. And with the price now staying above these both of my short-term moving average, as of today, I'm going to be bullish to neutral in the short term. In the micro term, obviously, let's be bullish in the micro term. And you say, well, why not just totally bullish in the short term, KY? Bullish to neutral in the short term, because as you said, okay, we got that island bottom reversal. We're back above both of your short-term moving average. So why are we not fully bullish in the short term? Because technically speaking, in the short term of things, this is still can be classified as lower highs here. So good thing about that is we don't have a lower low. This is not a lower low. We can all agree that that's an equal high. So we don't have a downtrend. But there is just a little bit of a selling pressure that's still lingering around just because of these lower highs. So there might be some kind of shenanigan, another gap down or some sort. That's why I'm bullish / neutral in the short term until this gap gets filled and we cultivate that higher high. And at that point, we will be classifying this market in the short term full on bullish. And when I say full on bullish, that does not mean it's not going to have pullbacks, but it's pulling back to have a short term and the micro term higher lows and higher highs. Let's check out that oscillator and see if we can extract any more information. So oscillator, we prematurely crossed up. That's good for the buyers, bad for the bears, because bears want to bring it all the way back down to the oversold level to keep that selling pressure going. Well, it prematurely bounced up. That means there's a lot of dip buyers anxiously waiting to get in, not even letting the oscillator reset all the way to the bottom of its band. It's not overbought. We still got a little bit more room to go, so there's still a chance that bulls can push it if they really want. Best case scenario, obviously another gap up, just jumping over this fence will be the most smooth transition back up to the all-time highs. Just pushing it up, I think that's also good, because we still have some room to move here. Buyers are not tired, so I think by the time this thing gets up to fill this gap, that will be when this thing will get to the overbought level. I'll come back for you. We'll re-examine the situation. Today's Thursday, so tomorrow is a Friday, and we'll do weekend analysis, which I do longer term view of this market, which I do every weekend. You guys enjoy the rest of this evening, and good luck trading tomorrow.